welcome in now the next guest that we have. Anuj Puri of ANAROCK Group is now with us. Anuj, thanks so much for taking out time for us. When we just look at, the way ahead, how things are moving in terms of real estate. First, can you start with the trend and then we can talk about the following year? What changes are you expecting?
Absolutely. The trend continues to remain very positive. It is pleasantly surprising that the trend on the sales has continued on the residential extremely positive. The first quarter of this calendar year, that's January to March, is the best that we have seen in a decade. Nearly 110,000 homes were sold in the top 7 cities. Certainly, Bombay continues to lead it. Over 35% of the 110,000 homes that were sold were in the MMR region, followed by NCR and Bangalore. Mortgage rates have gone up, and there is obviously some concern that with increasing mortgage rates, would the demand start to come down? But interestingly, we haven't yet seen any negativity on the demand, despite the mortgage rates having gone up.
When we talk about mortgage rates and the demand, are you completely surprised the spiral that we have seen in interest rates really having not having any major impact on even affordable housing?
I think on the affordable housing, we're starting to see the impact. The negative impact has happened on the affordable housing. When you look at the overall numbers on the residential, they stack up well because the mid, high and premium demand for residential is what is picking up the shortfall of the affordable housing. But affordable definitely has had an impact with the increasing mortgage rates, to answer your question. But because we give the overall statistics, unless you peel the onion, then you start to see that affordable has had an impact. But overall, when you stack up the premium, luxury and the mid-level doing well, augurs good for the overall sale of the number of units.
Right, Mr. Puri, this is Ankita joining in now. You spoke about the affordable segment. Let's talk about the luxury segment now. Luxury segment saw a major uptick this year in 2023. Do you see this year, mirroring 2022, where the luxury segment clearly outperformed?
So clearly, that continues to be the big bull within the MMR market particularly. And now we're seeing that in Gurgaon as well. I mean, if you were to look at the DLF results, they did one mega launch, which was a phenomenal success. Likewise, in Bombay, we're continuing to see the demand for the luxury remaining very, very solid. And the way that we're defining luxury is that anything above $1 million. In Bombay, where we have seen the demand even more is above $5 million. And the reason, the demand in Bombay has become stronger on that $5 million is because these are few projects in Bombay and they've got fully completed. And that's where we're starting to see the demand from the end user move in, particularly in South Bombay, and the continuous sales within those projects doing strong.
In terms of new project, in terms of aggressive expansion, are you seeing that coming up, or you think people are rational this time? It's not like 2009 to 2012 where any project was just getting any value from the developer.
Certainly not. I think the developers are extremely cautious from all angles, from the regulatory, from the legal, from the consumer, from the media, everywhere. They're extremely cautious that if they do pick up a project and they start to sell, they want to make sure that they complete the project. The consequences of that they've seen with the developers who were not able to complete the projects have been pretty harsh. So we're not seeing any kamikaze approach by the developers where they are going mad and just trying to launch new projects. They're very careful. We're also seeing only good quality developers launch, both on the listed side and the unlisted space, only good quality developers. Plus also, funding to the tier 2, tier 3 developers is very, very difficult to get in, as a result of which the tier 2, tier 3 developers, even if they wish to launch, aren't being able to do it because the debt is not really available to them.
All right, Mr. Puri, thank you so much for joining us today.